Chapter 36, Agency. We're going to look at the agency relationship, what it is, how it's created, what authority is given. First, there are three parties. You have a principal, that is the individual or business who is looking to enter into a contract with a third person. Then you have the agent. They're the intermediary. They are representing and working on behalf of the principal to get a contract in place between the principal and the third party. The parties to the deal are the principal and the third person. Those are the only signatories on the contract. The principal and the third party are the ones entering the contract. The agent is just working to bring the contract together, to bring the parties together to get the contract in place. When you have agency relationships, there is often the question of whether or not the agent who is negotiating the contract on behalf of the principal is working as the principal's employee, or is the agent an independent contractor working for themselves? This is an important question because if there is a dispute between the principal and the agent, the agent's status matters. If the agent is an employee of the principal, they're treated differently than an agent who's merely an independent contractor of a principal. So how do we tell? How do we determine? We've got a test. Often in the law, as we looked at this semester, we have tests to determine, and we have something called the right to control test to determine whether or not the agent is an employee of the party they're representing, or if they're just an independent contractor who's been hired by the principal on this particular contract or deal. So let's look at the test. First of all, how much control does the hiring party, that's the principal, have over the work of the agent? Is the worker, which would be the agent, engaged in the occupation, in their own occupation? Do they have their own business distinct from the principal? For example, you could think of an attorney as an agent for a principal. Attorneys often work as intermediaries to help people negotiate deals. Particularly if you're an attorney who's got a corporate transactional practice, you don't go to court, but you help people transact deals, you could often be viewed as their agent. In that situation, as an attorney, you would have a separate occupation or separate business distinct from the principal that you are representing when you help them negotiate a contract. So you're not going to be considered, looking at this right to control test, as an attorney, as an employee of your principal, at least not based upon these two factors. Number 3, is the work done under the hiring party's direction or by a specialist without supervision? My attorney example is helpful here. If I am an attorney who has been hired by a business to help them negotiate a deal with a third party, and I have my own practice, and I negotiate this deal for them, but I'm under my own supervision, this looks like I am an independent contractor for them in this example. In contrast, if I am an attorney who works for the company whose contract I am negotiating, I'm on their payroll, I'm in their internal legal department, and my work is subject to their review, then I am an agent, I'm putting that in quotes, who appears to also be an employee of the principal I'm representing. Question 4 in our right to control test. Does the hiring party supply the tools at the place of work? Again, If I've got my own law office, I'm taking calls from clients who'd like me to negotiate contracts for them. I'm supplying my own tools. So I sound like an attorney who's acting as someone's agent, and I'm an independent contractor. Conversely, if I'm part of the internal legal department at a business and my office, my computer, my research materials are being provided by the corporation I'm working for, when I negotiate contracts on their behalf, I am an agent who is an employee of the principal. Number 5, for how long is the person employed? So this question might not be obvious to you, like how does this factor into our right to control test? Well, if I am an agent who works long-term, I have an indefinite contract with my principal, it sounds like I'm just a regular employee. However, if I've just been engaged to negotiate one contract or a series of contracts for a stated period of time, 6 months, 2 weeks, a year, those are specific limited amounts of time that I've been employed. So it sounds like I am acting as an agent, but as an independent contractor. 6, what is the method of payment? Is it by time period or is it the completion of the job? Again, if you're on salary, you get a pay, you're paid every 2 weeks or every month, and you're negotiating contracts on behalf of a principal, it sounds like you're their employee. If you only are going to be paid at the end of the negotiation of the particular contract you're working on, you sound like an independent contractor. And then finally, an element of this right to control test is what degree of skill is required of the worker. The more skill you have to have, if you've got specialized knowledge and you're being brought in for your specialized knowledge, it's more likely that you are an independent contractor. These 7 elements don't all have to be present. This is a sort of laundry list of things that you can evaluate if you're trying to determine, is the agent in this scenario working as an employee of the principal, or are they an independent contractor who has the right to control their work? And probably, if you're an independent contractor, here's another sign that that you're an independent contractor is if you negotiate contracts on behalf of several different businesses for stated periods of time. You're in a contract with different organizations, different clients. Then that sounds like you are an agent who is an independent contractor. Again, why do we care? Because, as we have seen during this course, sometimes disputes arise. And so if a dispute arises between either the principal and the agent, or between the principal and the third party as to who the agent was actually representing, their status of whether or not they are an employee or an independent contractor may impact the result. So let's look at an example. National Farmer Union Insurance and an independent contractor. And that's going to be the question. Elmer Ostman was an insurance agent for National Farmers Union Insurance Company. The company had a contract with him providing that he was the local agent acting solely as an independent contractor. So that's what his contract said. It said he was an agent acting as an independent contractor. So you might think, well, the contract clearly states what he is, so what's the dispute? As we've talked about earlier, even though you can have terms in a contract, even though you can have a statute that has language, sometimes we still need a court to interpret what the terms actually mean, because the parties might read that language and interpret it differently. And if they don't agree upon what the words mean, it escalates to a lawsuit, and sometimes it escalates to an actual trial, and the court has to opine, i.e. issue an opinion as to what those terms actually mean in the context. So that's what's happening here. The contract also stated that nothing contained herein shall be construed as creating the relationship of employer and employee between the local agent and insurer. So this company was trying to do its best. They were being diligent in their language. They also said, no matter what is in here, which is why it says nothing contained herein. So nothing we've written in this contract shall be construed, i.e. shall be interpreted as creating an employer and employee relationship between us and Ostman. In other words, Ostman, no matter what you do for us, you are not an employee. Now, we have facts also. It says Ostman filed his own taxes as a self-employed individual. He set his own and his staff's working hours. He had sole discretion in hiring and firing his staff. He bore all his own expenses in selling insurance and provided his own transportation and office equipment. So those are the facts. We had our contract language, now we have the facts. And so what's our dispute? When Ostman was terminated, he sued the insurance company, claiming that he was an agent employee of the company and that the company had engaged in employment discrimination. So Ostman is trying to use some federal statutory language. He's probably looking at the EEOC and some regulations and thinking, hey, I think I can bring a discrimination claim against the employer for how they treated me. Maybe they didn't give me proper notice, or they didn't comply with some regulation, some part of the EEOC regulations. So he wants to bring a lawsuit, an employment discrimination lawsuit. Is he going to be able to do so? Using the right to control test, I would think not. Why? Not only does the contract language expressly seem to state, no matter what you do, you are an employee. They've mentioned that twice. But our facts here also, if we use the rule of control test, he's filing his own taxes. He is in charge of his own staff. He is supplying all the tools of the workplace because he's providing his own transportation, his own office equipment. He's bearing his own expenses. He clearly appears to be in business for himself. When he sells insurance or negotiates the contracts for National Farmer Insurance, he is an agent on their behalf. He may be finding clients who want to purchase that insurance, but National Farmer Union is the party who is directing that, and they are only engaging Ostman as an independent contractor because they don't seem to exercise any actual direct supervision or control over how he is operating. Let's look at another one. Philip had a relationship with Company A, where he was given the right to sell Company A's product in a certain territory. The orders were subject to acceptance by Company A and were not binding on the company until it agreed upon the orders. That's how we know we have an agent. The agent can't bind the principal unless the principal signs off. We're going to talk about that some more. Philip was paid by commissions only and could determine his schedule and hire workers at his own expense and sell products of other companies. That should send off bells in your head. Ding, 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 ding. If he can sell products of other companies, he is not an employee of Company A. Philip is an independent contractor. He controls who works for him. He is not paid a salary. He can sell products of other companies, i.e. probably competitors, and the company has to approve of his orders before the contracts are actually binding. Now, we've got ways we can classify agents. So let's look at the 3 ways to classify. Our 3 types of agents are special, general, and universal. The special agent is authorized to transact business to help you, the principal, negotiate a contract. in a very particular specific area. Prime example is the real estate agent. When you retain a real estate agent, you are authorizing them to help you negotiate a contract as it relates to land or property. That's the only area in which that agent is authorized to negotiate contracts on your behalf. The general agent is authorized by the principal to transact all affairs, all the business contracts and relationships that might be necessary to conduct a particular type of business. So let's think about an example here. So a manager in a store. Let's assume that you are the principal and you are a franchise owner. You own a TJ Maxx and you have several employees in your TJ Maxx location. But not all of them are going to have the authority to enter contracts on your behalf. Your cashiers are not going to sign leases that are necessary to get space for your franchise locations. You also wouldn't expect your cashiers to sign off on orders that you place with buyers to get in products. No, that's going to be at a higher level of employee. For instance, the general manager of the store. The manager of the store is an employee. They're on salary. They're at your direction. So you as the principal have oversight. You're supplying the tools that they need for the business. However, if you've authorized them to negotiate all of the contracts that are part of operating that franchise location, they are an employee and they are your agent. In contrast, a universal agent relates to agents authorized to conduct business in one's personal life. Universal means all. And so if you have designated someone to be your universal agent, you are authorizing them to conduct the business that you would normally conduct in just your regular personal life. So not just related to a job, but personal things like paying your bills, making medical decisions, things related to the running of your life. The example given here is Sam is going out of the country and he's going to execute a power of attorney in favor of his mother to act on his behalf while he's out of the country. Why would you do that? Why is Sam making his mom his power of attorney? Well, while he's out of the country, he might want his mother to be able to legally go to the bank, cash his checks, deposit money. Maybe he might even want his mother to take up looking with his real estate agent, continue looking for a home for him while he's out of the country. If his mother has been empowered as his power of attorney, she could locate him his new home, sign it as Sam, and purchase a home on his behalf, and it would be his when he gets back. Because a universal agent is stepping into the shoes of the principal, they can do all of the things that the principal would do. I'll give you another example. My daughter is a competitive gymnast. She had a national meet in Spokane, Washington, all across the other side of the country. Another team member was also going to travel to Washington, but his parents could not go with him. So his mother executed a power of attorney naming the gymnastics coach as her universal agent as it related to her son for the week that we would be in the state of Washington. She did this so that if anything happened to her son, because it was a competitive sport event, and unfortunately people can be injured during these activities, she wanted the coach to be able to step into her shoes, authorized any medical treatment that would be necessary to be able to take care of her son just like she would if she were there. So the coach in this instance, he's not a general agent. He's not going to transact business. He's not a special agent empowered to negotiate a particular contract. He is acting as a universal agent. He's authorized to do all the things that the mother has put in that contract, because there will be a written document creating this power of attorney in the coach, where she lays out what he can do. And he's got all of the powers necessary to effectuate whatever is put in that power of attorney, to take care of the gymnast that was put in his care and act in locus parentis, act as his father in that situation. So universal agencies are very different from general. Universal agencies have a lot more power, and they're typically used in a personal context. They can be limited by time. You can limit the scope of what your power of attorney, what power you are giving. It's whatever you as the principal delegate to the agent. But they're generally used in the personal context. You often see power of attorneys created for medical situations and also for aging parents. So how do we create the agency relationship? We've got two main ways, either by agreement or by conduct, which is also known as ratification. Agreement is the easiest and the simplest. By agreement is we either expressly agree you will serve as my agent and negotiate this contract on my behalf, or it can be implied by conduct. I hire you to be the manager of the store. Part of your job duties is running the store appropriately, and as a result, in order to execute your job duty as manager, it entails having the authority to enter into certain types of contracts. That would be by conduct. Ratification, that's implied by conduct through the express hiring of you in that position. I want to make that clear because the next type of conduct is a little different. Ratification occurs when an agent acts on behalf of a principal and they do something that they weren't actually authorized by the principal to do. But after they have done it, the principal either doesn't disagree or they are aware of what the agent did and they don't take any steps to undo the contract or disavow the contract or let the third party know that they don't plan to abide by it. So the principal, by their act or agreement, they ratify the acts of the agent, even though they didn't initially authorize them, by essentially remaining silent or not doing anything to fix the situation. So in order for this to happen, the principal must know all of the facts underlying what the agent did. And then once they do, as long as the principal knows what the agent did and they don't say anything to set it aside, they don't try to get out of the contract, they don't tell the third party, oh no, my agent wasn't authorized to do that. If they don't take any action, but they know of all the facts, then that conduct, the unauthorized acts of the agent, are said to be ratified because the principal did not do anything. It's as if the agent did have the authority to do what was done. So that sounds really murky, right? So let's look at some examples. Arnold asked Grace, a gardener, to contract with others for the care of his lawn on a regular basis, and Grace agrees. What type of agency is this? How was this formed? Was this express, or does this sound like ratification? Arnold asked Grace, because she's his gardener, to enter into contracts with others in relation to this lawn care. So first of all, I would say that Grace sounds like a special agent because she's only transacting business as it relates to the garden. And this agency was created by an express agreement. Arnold, as the principal, affirmatively asked Grace to enter into contracts as it relates to lawn care. Let's look at another example. Jack claims he is Lisa's agent and buys a computer from Terry under the guise that he is an agent of Lisa, right? So Lisa is the alleged principal. Jack tells Terry to send Lisa the bill and the computer. Terry sends Lisa the bill. Lisa receives the bill, but does not immediately contact Terry, i.e. she doesn't do anything. Instead, she uses the computer for a month. Then she tries to return the computer to Terry based on the fact that Jack was not authorized to buy the computer. So Jack claims that he's Lisa's agent. By that word claims, we know that's our signal. This must be unauthorized conduct. He claims he's her agent. He tells Terry, Lisa wants this computer, send her the bill. Terry is the third party. He thinks he's got a contract with Lisa. He sends her the computer and the bill. Lisa receives the computer, but does not immediately do anything. Instead, she decides to use the computer for a month. Then she tries to return it, saying, hey, I don't have to pay for this. I hadn't authorized Jack to purchase this. What do you think is going to happen? By using the computer for the month, Lisa has ratified the agent's unauthorized acts. And now it is as if Jack was Lisa's agent and had the authority. This is an agency created by ratification. So I hope you see by this example, an agency can be formed by ratification if the intermediary, the person who claims to be your agent, goes out and enters a contract purportedly on your behalf. They're acting as if you, the principal, have given them the authority. If you find out about the details of the deal, like Lisa did here, and you don't do anything, or you delay and use or do something inconsistent with letting the third party know that this wasn't authorized, then the law says it is as if you had authorized it. And Lisa, you're not going to be able to now return this computer that you used for a month. That would be inequitable. Let's look at another example. Jerry is Grant's agent. Jerry has the authority to purchase art for Grant. Grant sells the art purchased in his museum. However, Jerry can only purchase art up to an amount of $10,000. So Jerry is an authorized agent, but he has a limitation on his authority, $10,000. Without Grant's knowledge, Jerry purchases from Peter a painting for $15,000. When Grant discovers Jerry's actions of purchasing the painting, he does not admonish Jerry. Instead, he attempts to sell the painting in his museum. Then, after Grant is unable to sell the painting, he decides to tell Peter that Jerry's actions were unauthorized. What's going to be the result here? Although Jerry's authority was limited to $10,000, Grant ratified the purchase that went over the limit when he attempted to sell the painting. So Grant is going to have to pay Peter, the third party. He will not be able to claim that Peter was working with an unauthorized agent because he ratified what Jerry did when he tried to sell the painting. So let's review again, agency by ratification. Hopefully these examples have shown you. With ratification, what happens is that you have an agent who either lacks authority or they act beyond the authority that they were given. This can still bind the principal if the principal is aware of the facts of the contract. They know, in our example with Lisa and Grant, they knew the details. Lisa knew how much the computer cost when she started using it. She knew that there was still a bill that hadn't been paid for, so she knew all the facts, and yet she still used it. With Grant, he knew that the painting was $15,000, and so he was going to have to pay the artist $15,000 if he was not able to sell it. And yet he still attempted to sell it. So they knew all the material facts. The agent held, in each situation, the agent held themselves out as acting on behalf of their principal, whom they disclosed. In the first scenario, the computer salesman knew that Lisa was supposed to be the party paying, not the agent. With our painting, the artist knew that Grant was going to pay him, not the agent. So it was disclosed. And in both situations, the principal was capable of authorizing the act. It was the kind of business they were doing. They had empowered the agents to be in those, to work in those scenarios. And so all the conditions are met for ratification. So what does ratification do? It says that yes, even though the agent wasn't authorized to act, yes, the principal is going to have to pay. Finally, each agent may act according to 4 types of authority. Now, we talked about 3 types of agents: specific, general, and universal. Those agencies are formed by either express agreement, which can be implied or written or oral, or by ratification. Now we're going to look at, well, what type of authority do they have? We know what kinds of agents we have. We know how to create them. What types of authority do they have? Well, they can have express, incidental, customary, or apparent. Those are the 4 types. And as usual, the express is the most obvious, right? Your express authority is what the principal has specifically empowered the agent to do. So the principal tells the agent to perform a specific act. For example, the principal tells the agent to buy new furniture and sell used furniture located at store 1, right? And then they tell them, though, at store 2, do not sell used furniture. You have been told affirmatively what your authority is. That's your express authority. Incidental authority is the ability to do things that are necessary to perform your express authority. So in our first scenario, if the principal tells their agent, buy new furniture and sell used furniture at store 1. Okay, so buy new furniture and sell used furniture at store 1. But do not sell used furniture at store 2. That's what they expressly are supposed to be doing. So incidental authority means the agent must have the authority to actually pay for the furniture that they are buying. So the agent has the authority to buy furniture on credit when funds are not made available to pay for the items. So what are we saying here? If you have a general manager in your store and you tell them you are supposed to be buying furniture to put in our store location so that you can sell it to customers, and you don't provide the store manager any money, there's no cash for them to go out and buy the furniture. Well, the law says they must have the incidental authority to purchase that furniture in some way because you gave them express authority to buy it. So that means credit in this instance. Customary authority. As the name customary suggests, this is authority that maybe the principal has not actually stated that their agent has, but it is what is usual and customary in the industry that they're working in, that these type of agents will also have the authority to do these types of things. Everybody who's selling furniture is going to have the authority to do this. So for instance, our agent who's buying and selling furniture might not have been told by the principal that they have the authority to issue receipts. But it is customary in the industry that if you are selling people furniture, that you would give them a receipt so that they have a way of showing that they paid, and you've got a record system for taxes and and all kinds of other business transactions. And then finally, our last type of authority is apparent authority. This is the kind of authority that the principal gives when they lead third parties to believe that an agent has authority. What does that mean? Apparent authority is when the principal is acting as if their agent has the authority to do whatever they are doing, whether or not they have given it to them or not. Okay, that sounds a little confusing, right? So let's look at this example. The principal was present when an agent sold used furniture in store 2 to a third party. Did you get that? The principal was there, i.e. the owner of the store probably, was present when their agent, let's call it the manager, sold used furniture in store 2 to a third party. Now recall, in our example for express authority, we mentioned that the agent was told not to sell used furniture at the location of store 2. And here they are selling used furniture in store 2. But the principal is right there and doesn't say anything. They don't stop them. They stand by while their agent, the store manager, sells used furniture in store 2 to a third party, and they don't stop it. Hopefully you're thinking in your head that means that their authority, even though they didn't have it, it has been what? Ratified. As a result, the agent, as it relates to the third party, has the apparent authority to sell used furniture in store 2. An appearance of authority was created by the principal's failure to stop the agent from selling the used furniture. Okay, so you might be wondering, why is that important? Well, this is how it could happen. So the third party who sells the used, who buys the used furniture in store 2, let's say they run into a problem. They get the furniture home and they sit on it and a spring pops out and they want to return it and get their money back. And then they go back and the store says, I'm not sure what you're talking about. We don't sell anybody used furniture in this location. The manager wasn't authorized to sell that furniture. We're not giving you your money back. What are you talking about? And the third party would be stunned and outraged and say, what? You know, I need to talk to somebody, because it'd probably wouldn't be the manager telling them that, right? It'd be the salesperson that they run into, or the clerk when they're trying to get their refund, who will tell you, oh, well, I don't know where you got that from. We're not authorized to sell that here. Haven't we all encountered that? You're in the store and someone tells you, well, I don't know who authorized that. That's not what the policy. And so you're trying to figure out, well, okay, well, obviously somebody did this, so you need to fix it. Well, this law is saying that apparently the principal gave the agent in this situation the apparent authority to sell in this store because they stood by and they remained silent while this unauthorized contract was entered, and they said nothing. Therefore, we are going to uphold the contract, and you, principal, are not going to be able to avoid the actions of your agent. Apparent authority is very similar, and you could argue is going to arise in situations wherever you've had a ratification of an agent's conduct, right? Because that's what happened here. The principal saw the agent doing something the agent wasn't authorized to do. They didn't say a word. So the principal has ratified the conduct of the agent. That contract is enforceable. That also means that the agent had the apparent authority to enter the contract. It's another way of saying the same thing. And I want to point out, this is sort of an equitable remedy here. We talked early on in the chapter about equitable remedies where money's not good enough, money is not sufficient. This is for fairness. It would be unfair to the purchaser of that furniture that when something goes wrong with it and they bring it back, if everybody in the store said, sorry, you can't get your money back, nobody was supposed to sell you that piece of furniture in the first place. That would be wrong. That would be unfair. It's like, well, maybe they weren't, but I didn't know that. And you stood by and took my money. And so that's how this concept of apparent authority and ratification of agent's conduct that's not authorized comes into play to help the innocent person in this contract, the third party, not lose out. So to summarize, for this chapter, you need to understand and know the three types of agency, how they are created, express or by ratification. Understand that an agency is between the principal. An agency forms a contract, but the contract is between the principal and the agent. And the agent can be using one of these four types of authority. We know how to distinguish our general agent from our universal agent because universal is relating to private life, just the duties of an individual in their life. The general agent is only conducting transactions related to a business in a business context.